Hello, fellow Rebel Capitalists. Hope you are well. So, we had a very weird day in the stock market. And I think it's important that we discuss this because we could have just seen a paradigm shift. Let me show you what I'm referring to. Kind of a quick impromptu video, so we don't have Josh with us right now. I'm going to do the screen share. And if you haven't been paying attention, Nvidia reported earnings yesterday, and they reported quote unquote blowout earnings. And if you guys watched the Rebel Capitals channel yesterday, you saw that I did a live stream on this, and I reacted to it in real time. Now let's go over to a chart of Nvidia. And you guys can see this. Now, we just go back 5 days, and the lead up to earnings, the stock was going higher and higher and higher. And sure enough, when they reported, we had this blowout number, at least that's kind of what the narrative was. And if you guys were watching my live stream and my real-time reaction, you'll remember when I actually saw the earnings and the expectations, I was like, yeah, they beat, but like, it wasn't that great. And here's the problem with all these high-flying AI stocks. They're not just priced to perfection. They're priced above that. So you not only have to exceed expectations, I'm saying expectations would be the idea of perfection. You not only have to exceed expectations, but you have to exceed expectations by a million miles. And if you only exceed expectations by 500,000 miles, then you got nowhere to go but down. And so when I saw the earnings report, what the expectations were, I can't remember, but they're a couple billion above in top line revenue. I don't have the chart in front of me. I think that's what it was right at the top of my head. And I said that, and the stock was way up. The stock jumps like 5%. And I said on last night's live stream that to me, this is kind of a knee-jerk reaction from retail. And I would fade this. I wasn't giving investing advice and I didn't take a position. But I said, this to me feels like you get this big, whoa, they beat expectations. And the Robinhood folks sit there and buy. And then after that euphoria fades just slightly, just overnight, then you see it come right back down. And then we got the jobs numbers this morning, which beat expectation. But then it was like, oh, yeah, but the unemployment rate went up. And oh, yeah, they kept revising down prior months. So the market perceives this to be bullish because, of course, bad news is good news. That increases the probability that the Fed's going to drop rates. And we know that even if the whole world is imploding and on fire, it doesn't matter because lower rates equals stock prices going up. At least this is what they try to shove down your throat. And at the end of the day, it's nonsense. It's nonsense. It's just another narrative that they can push to try to get people to buy. And so a couple things happened here. Now, let's go back to this NVIDIA chart. And so we see the open, and then we got, whoa, it opens way up. And look at this euphoria, hysteria. Whoa, they beat the AI. The AI trade is still on at the open. And then we got the beat in the labor market. Yes, the economy is on fire, or even if it's not, then if the labor market is deteriorating, then good news is bad news. But then you wait about an hour, and all of a sudden, bad news turned into bad news. And you combine that with, I think, this euphoria wearing off with NVIDIA, where you had this big spike with the Robinhood crowd, and probably the algos and a lot. There was a lot that went into it there. Obviously, there's a lot of moving parts. But then notice, once bad news became bad news, and we had this kind of paradigm shift. And for me, you guys know from watching my channel that I've been putting a lot of focus on this over the last probably year, that it's just all about narrative at the end of the day. It's not about fundamentals. I mean, anyone that argues that the stock market trades on fundamentals, I think I've got some oceanfront property in Arizona. that I would love to sell them at a great price. It just trades on narrative, and the market goes from one bullish narrative to the next bullish narrative. And if it's good news is bad news, or it's good news is good news, bad news is good news, all news is good news. But what you really need to wait for, and this happens in these cycles, it's just you can never time it. But inevitably in these cycles, you get to a point where if it plays out like past cycles, and again, no certainties, only probabilities. But if it does play out like past cycles, we get to a point where bad news is bad news. I always call it the Biden moment, where everyone in the mainstream media was trying to tell you that Joe Biden was sharp as a tack. And it's like you get to that point where it's so obvious that he's really struggling mentally that no one can hide it any longer. And then the narrative just completely disintegrates in minutes right in front of our eyes. And you know what's interesting? I interviewed or had a conversation with my good buddy Jeff Snyder on the Rebel Capital's interviews channel the other day. And we were actually talking about this. And Jeff was talking about the guy that actually invented the term paradigm shift. And his idea, I think he wrote a book on it. His idea that and I don't know if he was referring to the market or he was just referring to the way society works and the way we're hardwired as human beings. But the narrative stays the same for a lot longer than you think. But what ends up happening is gradually more and more evidence builds that's contrary to the narrative, like the earth is flat, as an example. And you just get more and more evidence that proves that that's not true. But yet the diehards are there just continuing to push the narrative because they're totally invested in it. But what happens is you get to the Biden moment, and that's what this guy that wrote the book called the paradigm shift. And it's when it's like the emperor is wearing no clothes moment. So I'm not saying that we hit that today. Maybe we did. Maybe we didn't. But I think it's something that we really need to pay attention to. I mean, look at this. AMD today down 7.84%. That's a big, big move down. And if we just had a down day in the market, or if Nvidia was just down 1.25%, I'd be like, yeah, it is what it is, right? Noise. But the fact that they had this blowout quarter, that they jumped way up here, and then they had a initial tailwind of, the Fed's going to drop rates even further. This is great for tech stocks. And then the whole entire thing just completely imploded to the point where Nvidia is trading lower, not just before when they reported earnings, but before you even had this run up a day or two prior to the earnings. They lost it all today, just poof, gone. So a lot of times what you see in the markets, it's noise, but every once in a while you get some signal. You get some signal where it's almost like the market is telling you, hey, I want to go down. Now, we rarely get that signal in the stock market. It always wants to go up. But you often see that. I've noticed that with interest rates, because with my portfolio, I do a lot of not short term, but kind of swing trades, if you will, around interest rates, because I think I've got an edge there, because, and this is just my bias, of course, but I think 99% of market participants don't understand what drives rates. They think that it's deficits and debt and all these things. And so if you are someone that understands that the real driver in interest rates is growth and inflation expectations, and you kind of dismiss the rest, I think that in and of itself is an edge. But then you combine that with the fact that I've done, how many whiteboard videos? Probably over 1,000, maybe over 1,500 whiteboard videos in the last 5 years explaining this stuff. You can't do that and not have a little bit of an edge. Even with the hedge fund guys that I hang out with in St. Bart's, obviously they've made way more money than I've made, and they're a lot better than I am. But there's some things involving like the banking system and the Fed's balance sheet and the monetary system and whatnot, and interest rates, by the way, that I know a lot more about that stuff than they do. It's blatantly obvious. Just having a 2-minute conversation with them. And so that's my edge. So anyway, with the interest rates, I'm always like hyper focused on what's happening with the 2-year treasury, the 10-year, pretty much across the curve. And I've noticed that if you really follow this daily, it's like interest rates tell you where they want to go. They're always telling you where they want to go because you get a little bit of a news that makes them go up, as an example, because growth and inflation expectations increase momentarily for whatever reason. And then they just kind of, come back down to where they were. And then they get some bad news or growth and inflation expectations decrease. And then they just go down to a lower level and they kind of bump up and then down. And it's like they're kind of just saying, we want to go down. And I've also seen it too, where they're saying, hey, we want to go up. We want to go up. But this could be one of those moments where the stock market is telling you, hey, paradigm shift, Biden moment, we want to go down. I mean, you give us lower interest rates and a blowout quarter from Nvidia, and we're still going to go down. And let's look at this intraday move here, not just on Nvidia, but let's look at the Dow. I mean, a massive intraday move. We're up. I think at one point the Dow was up like 600 or 700 points, if I'm not mistaken. And let's see, let me go back here. And then we just had this complete collapse just after we just go. It's almost like you're kind of teetering on the edge. It's like, no, bad news is good news. Bad news is good news. Oh, bad news is bad news. And so, intraday, 46. I'm trying to do a little. Actually, if my yeah. Whoa, I did not realize this. Intraday, I thought it was down about 700 points from peak to trough, but it looks like it was way more than that. Look, we're right here at the peak today. It's 11:20. Yes, right around 10:36 Eastern time. We're at 46,846. So I got my calculator here. So let me type that in really quick. Minus where we are right now, looks like 45,752. And we're down, 1,100. Almost. Down 1,100 points just intraday. And keep in mind, this is a day when the probability of the Fed lowering interest rates increased. This is the day after Nvidia had a blowout quarter. And intraday, you're down 1,100 points. I mean, maybe the market rips back tomorrow. Maybe we fast forward a week and it's at all-time highs or something like that. I wouldn't be surprised. And again, I'm not saying that I'm predicting that this is the beginning of a stock market crash or a bear market. I'm not saying that. What I am saying is I wanted to do a quick video on this because I think it's something that we need to pay attention to, because you don't see this type of stuff all the time. And it could be the start of something. Now, what's the probability, in my view, that this is, that Biden moment, and we've all of a sudden moved to this next phase where bad news is actually bad news, and we get maybe a bear market? What would I give it? That's tough. Right now, I'd probably say 50-50. And if you would have asked me yesterday, I would have said like 10%. So I think we're probably 50-50 right now. But if we start to see a couple days like this, where even if you get good news, it's bad news. Everything is bad news. Then the market is telling you which way it wants to go. And I think that's kind of the message that I'm trying to that I'm trying to get you guys to think about with this video. A lot of the market's noise, but the real edge is knowing when you're getting some signal in there and being able to decipher that and then use that to take action to build a portfolio that takes advantage of that direction, understanding that it's just a probabilities game. I heard someone on a podcast say, and I love this saying. He said the way you make money in the stock market or in any market for that matter is it's all about the delta, the difference between probabilities and expectations. That's where the edge lies. The difference between probabilities and expectations. So if expectations are that there's a 90% chance the stock market goes up and the real probabilities, there's a 25%, that delta is your edge. That's your edge. And we'll have to see how this plays out tomorrow. Should be an interesting day. Will we have a big up day? Or will we continue the slide? You guys let me know what you think in the chat. And as always, make sure you're standing up for freedom, liberty, free market capitalism. And I look forward to seeing you guys tomorrow morning on the next video.